The Hang Seng continues its streak of underperformance. It's down over 1.5%.
Novelis, it has kick-started its IPO process with the investor roadshows for an NYSE listing.
On the way up, of course, 23,110 is the immediate upside level, and beyond that, you look at fresh highs.
Adani Group, we understand, is one of the potential suitors that Vijay Shekhar Sharma has directly engaged with.
Mid-cap index is down about 0.4, Sensex is down 0.3.
The local economy should continue to grow much better than the rest of the world.
The EBITDA has grown by about 13%, margin improvement of around 130 basis points.
The 0.6% gone in the benchmark indices, the mid-cap index in the red now.
90% of these 54 stocks they've identified have outperformed the Nifty in the last 6 months.
Registered weak set of numbers both in Q4 FY24 as well as FY24 on a full year basis.
The current establishment is voted back to power. The medium-term GDP growth, the participants see it anywhere between 7 to 8%. Bit of a recovery on the index as well. The S&P has affirmed the rating. The rating remains the same, but the outlook has been revised to positive.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, caution once again this Wednesday afternoon with the markets down. Nifty is down 100 plus points, 150 nearly. The Nifty Bank is down more, is down 1% on the day. Broader markets are flat. So it's just once again, I think, a one-day closer. But the waiting game is very much on. It's kind of painful, but that's where we're at. We're, of course, coming to you from the CNBC-TV18 Motilal Oswal studios. This is Closing Bell. I'm Prashant. With me, my colleagues Rima and Surabhi here. Nigel is joining in from the newsroom floor. Guys, good afternoon.
Good afternoon. And speaking of waiting, it's the same feeling, right? Waiting for the rains, waiting for monsoon, waiting for June 4. And I think both will arrive at the same time. Clarity in terms of elections and perhaps the monsoons here in Mumbai.
The proverbial rains. Huh? Are you referring to the actual rains?
Well, we'll have to see.
But yeah, it's just waiting. And I think that's what markets are doing. It's a little bit down, a little bit up. That's essentially what's happening across, range of stocks and sectors. So, you want to look at technicals, etc., but you want to be a little cautious with this because this is all, of course, it's not even pre-positioning ahead of results. It's just a little bit of risk reduction more than anything else. Because, you really can't take a view. It's not as if it's some economic data where there is, of course, there is consensus expectation, more so like a base case outcome of the elections. But in that sense, I wouldn't call this pre-positioning, just a little bit of caution. So we are on the Nifty and the Bank Nifty under the 40-hourly average, 40-hourly exponential moving average, both on the Nifty and the Nifty Bank. So, to that degree, maybe a little negative, but broader markets are flat to even slightly higher. The last I checked, the small cap index was up 1/3%, declines more than advances, but again, not by very much. And there is pharma as a pack, which is doing well. It's turning out to be a good last 4-5 days. Metals are higher. Hindalco, Nigel will talk about that. And PSUs, which are not up wildly or anything, but look at defense names, shipbuilders especially, Cochin, Mazgaon, Garden Reach. PSUs are doing well, and defense, of course, remains a strong theme. Rima.
Well, if you pull up that intraday chart, when S&P revised the outlook for India to positive, there was a bit of a spike that we had intraday, but that's been sold into. And once again, the Nifty is now down, not in the day's low, but it's still significantly lower. That spike you saw closer to, between 12:30 and 1 is when that S&P news came out. And now we're down 150 points in the Nifty, Sensex down close to about 560 points. Banks are underperforming for the second day in a row. The Nifty Bank is down close to about 1.5%, declining for the second day. And we were hoping that this week we make that march towards 50,000. But in fact, we've retraced quite a bit. Today, ICICI Bank, Axis Bank, HDFC Bank continue to see a fair amount of weakness. On the way up, it's Hindalco, a couple of these Adani Group stocks like Adani Enterprises, Adani Ports, and throw in even a power grid, which was higher yesterday. Which was under pressure yesterday, but today it's higher.
Absolutely mixed trends, but more red than green. I guess that's the short point. Just on the S&P upgrade of the outlook, not the rating, but the outlook. So 3 key points they cited as to why they've done that. Number one, very strong GDP growth in India. Number two, the improving quality of fiscal spending. And the third is the commitment that they see, the government's commitment towards fiscal consolidation. So that's why they've upgraded the outlook. Now, will they upgrade the rating itself? To that, S&P is clearly laid out, a couple of conditions. They're saying, first of all, central government debt must fall to less than 7% of GDP on a sustained basis. That's when they'll think of an actual ratings upgrade. And second, of course, reforms and stability and the cautious stance on, fiscal consolidation, fiscal prudence, that should continue. And then they'll take a call on the rating. Interesting, of course, that this comes in before the election verdict. And that's what S&P is saying, that, this is agnostic to whatever is the electoral outcome. So that's S&P. We'll discuss this with a guest in just a bit. But something else that caught my eye was the selling in life insurers today. So a lot of the private sector life insurance names, there you go, very clear-cut patterned out there. And ICICI Prudential is falling a little more. We'll ask our guests about this as well. The three main life insurers, also even LIC for that matter, most of them under pressure. Nigel.
All right, guys, I'm looking at two stocks and both those two numbers will come post-market hours. One is Tata Steel, because we'll have to keep an eye out on the European business. Last 5 quarters, it's been making losses. For the time being, the stock is more or less flattish. So on Europe, what could happen is something that we'll be keeping an eye out on. Can those losses reduce? We are working with a net loss number on the European business of roughly around $85 to around $90 odd. So can it be less than that? That's going to be a key trigger that the street will be looking forward to. And the other one is Cummins. Again, another stock that's more or less flattish, but it's recovered from the low point of the day. So two big numbers, and the market reacts to these numbers. That's why I'm just pointing both these two stocks up, both of them as flat as can be. Shrikant Chauhan is with us, though, to help us with the trade on the index. Hi, Shrikant. Good afternoon and good to see you in. Well, we'll be having the Nifty bank that will swing along in the next 60 minutes or so. For the time being, it's down 600 points, and it's not able to recover a goodish bit. What's your take on the Nifty as well as the Nifty bank?
Yeah, good afternoon, Nigel. Good afternoon, everyone. Well, for Bank Nifty, the view is that it is oversold. It is very close to its crucial levels, but because it's a monthly expiry, weekly expiry for the same, we are of the view that near the expiry, most of the time we see a lot of pressure at certain levels. So till the Bank Nifty is not again coming back to the levels of 48,800, it is going to remain under pressure. But in case if we see any furthermore decline in today's date, then close to 48,300 levels, we should look for adding Bank Nifty with a positional view, with a view of at least next 2 to 3 days. For the Nifty also, the view is almost like of the same, that if there is any correction or even at current level, it's a buy with a stop loss close to 22,600. We are expecting market to rebound back to the levels of 23,000 in the near term. So at current levels, it's a buy. But for Bank Nifty, I think it is better to wait for some more time.
What would your stock picks be, Shrikant?
Okay, then in that case, I would like to go with Nalco, National Aluminium, because yesterday, despite these strong numbers, the stock fell to its important support levels of 190, 188. The volumes were much above the average volumes. And that's the reason we are of the view that it is very close to its crucial supports and there is a buying interest. Even the entire metal sector is doing well. So in that space, Nalco looks good to buy even at current levels with a stop loss at 193. We are expecting stock to move towards 210, 215. And the other stock which we like is State Bank of India. The reason is because it is down, but it is very close to its support levels of 825, 826. And whenever the stock has fallen to these levels, we have seen recovery up to 840, 855. So at this level, risk reward ratio is quite favorable. It's a buy at current levels with a stop loss close to 815 for the target of 845.
Okay. All right. Shrikant got that. We'll come back to you for some more trades in just a bit. Now let's get you that promised take on S&P's view on India, the fact that they've upgraded the outlook on the country, and sovereign ratings, of course, remain unchanged. We have Lakshmi Iyer joining in from Kotak AMC. Lakshmi, good to have you on the show. So interesting, coming just days ahead of the big event. And, I was just outlining the reasons. Basically, they're saying that the commitment to fiscal consolidation looks good. The quality of fiscal spending is increasing, all of that. But how do you interpret the market reaction to it? Not much on equities, but does it move the needle at all for the bond market?
Well, if you ask me in the very near term, will it have a significant impact? Would be the answer is probably not, but it's definitely a huge psychological or a sentiment booster because this is kind of crystallizing two things, at least in the mind for now, that this gives a lot of confidence or a leg up to the foreign investor who otherwise has been kind of doing a little bit of fence sitting, both on the equities and fixed income side. They've been kind of dribbling money into the markets very recently. So I think that leg up comes in very close to that, index inclusion actual date slated for the end of this month. And secondly, obviously, they are kind of endorsing the fact that there is clearly a diversion of spending towards the productive sectors. And of course, this will aid in overall fiscal deficit reduction. So I think it's a sentimental boost. Eventually, will it play well into the markets, both capital markets and bond markets? The answer is yes, but don't expect miracles overnight.
Lakshmi, I'm surprised you're saying FPIs are fence sitting when it comes to the bond market. They've pumped in 50,000 crore rupees, right? The net outflow from the equity market is about 20,000, but 50,000 crores has gone in. So just your thoughts, because you mentioned the index inclusion as well. From a FPI flow perspective, further movement of flows and then the movement of yield, what are you envisaging as we actually get to that event of the inclusion?
Yeah, so the pace at which they were deploying has obviously slowed down because US yields also have been playing a very critical role at 4.5 levels on the US 10-year. There is obviously some natural tendency to buy the US Treasuries also, and obviously the gap between the both yields are pretty narrow. So that is number one. Number two is obviously compared to equities, they've been pumping in more money into Indian fixed income. And we believe that trajectory is likely to continue. Announcements like these, though there is no actual rating upgrade, but at least the FPI making an allocation to India will definitely consider this as a positive stroke to lead into better outcomes as we march ahead.
That inclusion, Lakshmi, hi, good afternoon, is end of next month, the bond inclusion?
Yeah, 28th of June.
28th of June. By the way, we get stock market types and we ask them about the election outcome and what markets will do. Let me put that to you from a bond market perspective, Lakshmi. What are your thoughts? What's the buzz around elections? Because that's a big one.
Yeah, so the bond markets already got their buzz or bazooka through the dividend payment, to the government. So I think that was a bigger news, and definitely, the outcome on the politics front is important. But I think the outcome on the policy will assume more significance for the bond markets. And of course, it's an interplay of both these events, a few days apart. So I think the sentiment definitely will get a massive boost. So, if you're looking at a vociferous, majority, stability is not something which people are doubting. I think that positive sentiment which continues in equity markets will also flow through positively for fixed income because it has ramifications also on the currency.
All right, Lakshmi, appreciate you joining in and filling us in with all those details. Thanks a lot for giving us that quick analysis. Let's get back to the stock markets, though, and Hindalco, that's one of the top gainers in today's trading session. Let's run you through the details. Well, that's because Novelis has announced that they're going ahead with their IPO, and they've announced the price band as well. Hindalco, remember, is the owner of Novelis, so that's why, in fact, it's a positive rub-off. The price that they're fixed it at is around $18 to around $21 per share. The total number of shares equates to close to around 7.5% dilution. And for the 7.5%, they'll raise anything between 6,700 to around 7,800 crores. Valuation-wise, well, on an equity parameter, it values the company at around $10.8 to around $12.6 billion. But you need to rope in the $3.5 billion of debt. So put that together, the total enterprise value is around $15 to around $17 billion on. Now, on an average, the street is working with around $2.1 billion of an EBITDA. So then, in fact, 15 divided by $2 billion or 17 divided by $2 billion, whichever way works for you, it'll work out to an EV upon EBITDA of around 7 to around 8 times odd. That compares with the street, which is working with around 6.5 to 7 times. So that's good news for Hindalco, right? Because the street was giving it a relatively lower multiple, while the IPO will be priced at a higher multiple. post-listing, there will be a couple of challenges though. Why do I say that? Because the stock is up close to 25% from the time the IPO was initially spoken about. That was in February. The stock was at around 520 rupees approximately. So that's one factor. But and the other headwinds for them will be that an FII, which owns a stock in Hindalco, could be tempted to shift to Novelis because as a percentage of the SOTP, Novelis is where the value is at. So now they have an alternate way. They can go directly and buy it, if it's listed abroad. And also there'll be a holding company discount that will come in. Keep in mind today, even Nalco is higher, Hindalco is higher, so it seems an aluminium play that's playing out there. But for the Hindalco to run away from here solely on this news will be unlikely. Brokerages like JPM as well as CLSA, both of them are positive on the stock. So that's about Hindalco. Prakash Diwan joins us. Prakash, what do you do with Hindalco at around 710 rupees? Because the stock has run up a goodish bit. I think for the stock to run up further from here, then the domestic business has to do much better. The EBITDA per ton has to do much better of the aluminium business. The copper, TCRC business has to do much better. Your take?
No, absolutely. So, we spoke about this event that was around the corner. And the best time to look at the stock was when, the numbers came up and the commentary on the capex was something that the street wasn't very well prepared for. And of course, it was followed by the Novelis IPO plans. But, if you look at from 500 to 700, the journey has been fairly quick, Nigel. I mean, 40% in 4 months. I would believe people will look at booking profits for sure. Because post the IPO, you will have to start looking at Novelis as a separate business with its own dynamics, and the kind of the constitution of the shareholding pattern out there is not going to be as simple as what Hindalco is right now. So you'll probably have much more volatility to grapple with, and as you rightly pointed out, it's a domestic business that finally you need to kind of depend on. So I would start booking profits at the 700 plus mark for sure. It's not a bad level to book profits. Wait for the right opportunity after all of this event is played out. And then probably you could buy it at even if you were to buy it at slightly higher than what you exit, but with more clarity and visibility coming.
Prakash, afternoon. Would you play Paytm on the hope that maybe Vijay Shekhar Sharma has reached out to some investors, as we've picked up from our sources? Is this a story worth playing?
I don't know whether his selling stake is going to impact the business directly and immediately. So, I'm sure we'll get opportunities to look at it once, some development happens. Right now, it's too much of assumptions, too much of conjecture. Of course, it's all in the realm of possibilities, Rima, I understand. And the market is latching onto anything that's even remotely positive for this beleaguered name to kind of, start looking up. But I would not jump at it, especially in an environment like today's. Just with 4th June around the corner, there's so much of uncertainty, which could kind of take your attention away from even events like even transactions like what you're talking about.
Okay, let's get to one big mover, and that's Campus Activewear. The stock is up more than 15%. Good Q4 numbers after what's been a tough FY24. Mangalam joins in with more. Mangalam.
Indeed, it was a tough FY24 for all the footwear makers, and Campus was, one of the worst hit when it came to stock price as well. From its peak, it had seen a correction of over 40-45%, and it's only after today's move that it briefly moved towards its IPO price. In fact, as we speak, it's very close to its IPO price of about 292 rupees itself. What the street liked this time around was the hope of some growth recovering for the company. I mean, 4.5% revenue growth is a slight improvement versus what we had seen in the first 9 months of this year, and as a result of which the company's EBITDA improved as well by about 130 basis points. The net profit came in closer to 33 crores, and that's a 40% jump over last year. Importantly, there were some good internals. The first part, the company's focus on trade distribution over the last couple of quarters did well for them. That's what the management said. The ASPs, or the average selling price, has remained stable, and add to that, the company has managed in a difficult year to go ahead and repay some debt as well. So 156 crore of debt off the books. Now the company is a net debt-free company, and the working capital discipline has also improved from over 100 days to about 80 days or thereabouts itself. Kotak has written a note on Campus this morning. There was a big beat on their estimates when it came to profitability, and as a result of which they have an ad rating with a target price of 285 rupees on the stock. What they believe is that the management has guided for double-digit sort of revenue growth coming by, and the 4% volume growth was actually led by 7.5% growth in their multi-brand outlets. With margins of around 17 to 19% going forward, with the promise of double-digit revenue growth, maybe some growth recovers, and which is exactly what the street is backing right now, especially after the drubbing that the stock had seen earlier.
Okay, all right, got it. Thank you very much, Mangalam. So that explains the up move on campus activewear, and a big one at that. Even on a sluggish day when it's holding on to all of that 16% gain right from the morning. Prakash, hi, good afternoon. I don't know if you buy their shoes. Will you buy their stock now? Do you see this as a potential turnaround story?
No, so I honestly haven't bought their shoes. The stock could start looking interesting now that, all the weekends are out. We've seen the capitulation. It's just kind of crossed its IPO levels. Sumi, what happens is when these kind of companies turn around, you need to still be reassured that this is more secular than just one quarter. Now look at another company and probably the leader in that space, and that's Bata. Brilliant business, everything is strong in terms of franchise distribution, but certain thing, there's something which is missing, which is not making it deliver. Now, if you actually look at from wherever 1750 whereabouts, that was as high, it's actually lost almost 30%, 25% so quickly. Now, whether that can turn around and sustain is a different question, because they have certain other things which probably stand better than campus. So I would go with a more tried and tested name, especially when rural demand is coming back. It's the likes of Bata that will benefit much more, when they're fairly diversified in their SKUs as well as their price point. So campus is interesting, sure, but not yet willing to write a check and buy the stock.
One of the, as Prakash said, Motilal was the early holder of the stock. They sold out, and very few mutual funds now own it. One new entrant into the mix is SBI Mutual Fund, which I think picked up stake only in the March-ended quarter, and now I think they own about 2% or so. So that's the new entrant. But otherwise, if you look at the sort of mutual fund list, etc., it's a little light. Of course, after what's happened over the last 2 or 3 years now. But broadly, one is, of course, early stages, and you need more conviction, Prakash. But we've heard this from a few people now over the last couple of weeks, that maybe at the lower end mass segments, you got to start to relook. Maybe it's just because the higher end things have done so well and valuations are so rich, so you're basically forced to look at stuff which is not done well. So is that what it is, or you think there's potential, there's a bit of a turn? Names like, for example, QSR names also, right? Jubilant Food, etc. Yeah.
No, absolutely. Whether you look at shoes, while Metro is doing extremely well, you end up paying such a premium to buy that stock. And that's why I gave the example of Bata, which is struggling, and it's primarily because of the demand slowdown. The same thing is not just QSR. You look at even staples. The smaller packaging is yet to kind of take off. We saw some of the numbers that started giving you a certain improvement in volumes, but where the pricing has come back, and that's from numbers like Dabur. I keep on saying Dabur is probably a very good proxy to the right price point, the right distribution presence, the right product mix. And if Dabur were to take off, you will see rural demand come back. QSR is become more of an urban thing, Prashant, in my view. It's kind of reached a stage where there's nothing much that's kind of leading to a change. It's just the Zomatos of the world that are growing for obvious reasons. So I would believe that you'll probably have to shift money to some of these other things. And the last thing that I want to leave you with on this part, where there's a lot of shift that's happening in strategies from most companies that I speak to, especially on distribution, is that they're looking at the ONDC in a very significant way. Now, if that adaptation is high or rapid, you'll probably see the likes of delivery and all come back. We've already seen how some of these beaten down, new age, internet-based companies had underperformed post their IPOs, whether it was PB FinTech or Zomato, Nykaa to some extent. Delivery also probably, falls at that same club, but it's made a comeback. I can tell you the numbers start giving you that, promise or the glimmer of hope that things could probably start looking up. And we spoke about this, Mangalam and I had a chat on delivery, I think 2 quarters back when the turnaround started. So I would look at those kind of things structurally, which are far more salient rather than, just certain pockets which are fairly narrow in terms of focus.
Prakash, thank you for joining in. Enjoy the rest of your day. Some stocks worth mentioning. One is Samvardhan Motherson, came out with the Q4 numbers a while back. One, there is an improvement in margin. So EBITDA margins at 10.8% have improved versus 9.2% same time last year. And also there is a reduction in the gross debt. And the reduction in gross debt is quite substantial, close to about 2,000 crore rupees. From about 19,200, the gross debt is down to 17,350. Railway-related stocks are also higher. So Titagarh Rail is up 11% and Jupiter Wagons is also inching higher now. And the other one is shipbuilding stocks. Another day of big gains. So Mazgaon Docks, Cochin Shipyard too are flying in trade. Get into a break. On the other side, we'll invite Gautam Trivedi of Nepean Capital. Stay tuned. Welcome back. It's almost the final countdown now as we head into the last phase of the Lok Sabha election. Now, interesting opinions are coming through. Nomura has surveyed 150 investors on what they think is going to be the outcome from this year's mega elections and the possible market impact. Hormus is here with the details on this. Hormus.
Well, the consensus from this survey, at least the 150 participants that were surveyed, is that the fact the BJP is going to return to power, at least that is the view of 99.3% of the 150 participants that Nomura surveyed in this. And when we break the numbers down now, among the 150, 83% of them believe that the BJP on a standalone basis would be able to get a majority by themselves. If you break it further down, now there are divergent opinions on how many seats would the BJP win on their own in 2024, whether they would better their tally of 2019 or they would be lesser than that tally of 303. On the better front, there are 45% of the participants. On the lower than 2019 front, we have 36%. But on a consensus basis, the investors believe that the BJP would win 297 seats by themselves and the NDA would win close to around 344 seats, both of which are lower than the 2019 figure. Now, when it comes to the economic outcome, they believe that if the NDA is voted back to power, the medium-term GDP growth would be anywhere between 7 to 8%. But if the India Alliance is voted to power, then that GDP growth figure would slip down to 6.5%, and then they expect major fiscal slippages as well well if the opposition alliance is voted into power. Now, what the market is factoring in is that they are factoring in a BJP victory here in the Lok Sabha polls, and any other outcome, according to Nomura, would be a negative for the markets. But this sectors that they expect to benefit if the BJP does win this election is infrastructure, capital goods and defense, something that the government has been laying a lot of emphasis on over the last 5 years. And what they say is that if the BJP wins, it will be a single-digit rally on the Nifty, single-digit percentage rally on the Nifty, because the market has mostly factored this in. If the BJP comes to power with a coalition government but without a majority, there will be a 5% correction there. And if the opposition alliance is voted to power, you might see a repeat of 2004 when the index corrected 20%. But that is an unlikely possibility according to Nomura. So all in all, the consensus on the street, at least for the 150 participants, is that the BJP is most likely to be voted back into power in 2024.
Okay, all right. Arma, just hold that thought. I just want to address a couple of stocks, the Adani Group stocks. As per the exchanges on Adani Green, there's a big promoter buy as well. We should be putting that out on Adani Green. More than a crore shares, I think, in terms of a promoter buy. So I think our ticker team will be addressing that in just a bit. Once that's out, we'll address it as well. But Arma, tell us, CLSA as well has come out with a note. Tell us more on that. Which are the companies that are perceived to be beneficiaries?
It's interesting from CLSA, Nigel. They're saying that they've classified a set of 54 stocks that they expect to benefit as direct beneficiaries of the government's current policies, and that they have classified them as Modi stocks, and they call them that 90% of those Modi stocks have outperformed the Nifty in the last 6 months, and hence they are calling this last 6 months gain that the index has seen as an election-driven rally, and they expect this outperformance to continue if the current government is voted back to power. Now, what are these Modi stocks? Most of them are PSUs, NTPC, NHPC, ONGC, PFC. There is L&T also in this list, and then come the telecom players, Reliance when it comes to Jio, Bharti Airtel, Indus Towers, all of them finding a name there. Now, what CLSA is also saying is that this narrow rally that we have seen may taper out by June or July, and hence banks is the sector to watch out for when it comes to it on a risk-reward basis for the second half of FY24, and hence of calendar year 24, beg your pardon. But the list of Modi stocks, beyond the list of Modi stocks, CLSA is betting on names like HDFC, Axis, which are already part of their India portfolio, as well as stocks like Zomato and Avenue Supermarts. And lastly, when they say that investors may face some bit of reality check once this euphoria dies down sometime in June or July, and some of those less patient investors may head for some profit booking going forward. And they also alluded to the topping out of PSUs in 2014 and 2019, a few weeks after the election, and they are hoping and they are expecting a similar trend this time around as well. So they have classified a list of 54 stocks, but watch out for PSUs after the election results.
Okay, all right, Hormuz, thanks very much for that. So interesting notes, right? One after the other. Yesterday we had 3 notes on elections and markets. Today we have 2, CLSA and Nomura, and I'm sure we'll see more as we head into that important sort of outcome, the election outcome. Gautam Trivedi is with us. He's a co-founder and managing partner at Nepean Capital. He's with us here in our studios. Good to see you, Gautam, and good to see you here in our studios.
Hi.
You just back from the US, we were just talking.
That's right.
And I'm sure that elections and what happens after that came up quite a bit in those conversations. I want to ask you to sort of, put your neck out and say, well, what's going to happen? Yeah. But let me, so something that which Nomura said, right? Even if the base case is true and the BJP comes back with a majority, they're saying low single-digit gains for the market. I just want you to respond to that, how you think about it. So this is a slightly more near to medium-term question.
Fair enough. It's a valid question, so it's not it's not putting me in a tight spot, which I was scared you might do. But the fact is, I think around 330, 350 is already priced in. The markets, as we've known for the last 6 to 7 months, it's very expensive. It's hard to find stocks. Even we have a hard time trying to find stocks, mid, small, large cap. Well, there are some large caps that haven't moved, but in the certain sectors, maybe chemicals, specialty chemicals, agrochemicals, that have underperformed. But in general, on a broader scale, the market's obviously pretty expensive. And I think the trip basically where I met a whole bunch of asset allocators, fund managers, I think they're very excited about India from a long-term perspective. There is no doubt about the longer-term India story playing out. And a lot of people ask me, is India where China was 10 years ago, 12 years ago, 15 years ago, depending on their experience with China and India for that matter. But I think the election is an important element in their final decision-making. They would like, I think, for the most part, to see the BJP and the NDA come back with the Prime Minister Modi having a third term. because they believe that's going to be continuity in terms of economic policies and the ongoing infrastructure build out, which the previous government wasn't that focused on, but these guys clearly are. So that would be a huge positive that would have come. Having said that, valuation still remains a big concern.
So one of the key talking points with all your conversations with investors is political and policy continuity. What else? What else was, top of mind for investors? Because FPIs have been holding back when it comes to investing in India right now.
Yeah, so you raise a good point, Rima. So if you look at it last year, if you look at the last 3 years, India's been at more than double the valuation of China, right? At one point, I think the valuation gap hit almost 160%, as in MSCI India over MSCI China. So I asked the question, okay, for the last 3 years, India was always expensive. What's changed in 2024 calendar? And what's changed really is the fact that, and considering the fact they put $21 billion last year of net FPI flows that we saw last year, they said, we have an alternative, which is China. So China's, if you look at the table this year, from the amount of money that's come into Asia, Japan's the top with 33 billion of net FPI investment. Then comes Korea with 16, China with 12, Taiwan with 6. So we are actually at the lowest end of the pecking order, but a negative 2.4 billion of outflows this year to date. So I think the valuation has become now an issue because there weren't any major alternatives last year, or more so even the last couple of years. But with the Chinese government announcing a slew of measures to open up the economy, stimulate the economy, money has gone there. Some of it, I think, is still FOMO money because people have been left behind. They've lost money in China. Some people are holding on to their positions. They've come back to life, some of those positions. So they're not exiting China, but incrementally, money is not coming into India as of now. Things could change coming Tuesday if the BJP/the NDA gets a much bigger number than anticipated.
Okay. So, Gautam, let's go back to the central problem in that you're saying high valuations and tough to find stocks, right?
Yeah.
But what the earnings season has sort of taught us is, at least for some of these capex plays, including a lot of the PSU stocks, earnings are still coming through. At least we haven't run into major disappointments over there. So, I mean, how would you cut it? How would you... I think that's the problem people are facing, right? Do you go with the leaders, which have run up 100%, 200, 300%, or do you wait for the laggards, like, say, FMCG, to turn around?
So, I think the way to look at this is, and the one question that I was asked across on this trip was, what will cause the correction? When will India come back to, let's say, 18 times or 17 times, which is currently at 21 times, calendar 25 PE? So I think I don't know the answer to that, what's going to cause the correction. Maybe an upset on Tuesday, or maybe a number that's a lot lower than what the market was anticipating. But the problem I see is that the domestic flow is coming in non-stop month after month. In fact, the SIPs are actually hitting a new record high every month. So as a result of which, the weightage of India, the market cap's going up as a result, and the weightage of India from a pure market cap perspective within the MSCI universe actually is increasing, which means the passive funds have to match that, which brings in that FPI flow, which is non-active. I'm talking of non-active. Passive money still has to come and match the increase in the weightage of India. So I think that becomes, in some sense, or has become, what I'm seeing over the last 12 months, a self-fulfilling prophecy. So until there is no slowdown in the domestic flows, which you and I guess all of us sitting in this room, unable to foresee that slowing down, which in a way is also good. The other side of that is that it's good that the financialization of savings is happening. The average Indian who basically 10 years ago, I remember saying, we'll never invest in the stock market, is coming in. So I think it's good for the longer term development of India's equity capital.
We're not
markets.
getting the so-called healthy correction, the deeper healthy
We need
correction.
that, and I think maybe the government or the SEBI takes some steps to control some of the F&O, madness which is happening right now, post-elections.
All right. Okay, hi Gautam. Good afternoon and good to see you in our building, in our studios as well. Gautam, I wanted to ask you about the EMS space. That's a space where you've been quite positive on. I recall in the past you've said that the EMS space could probably be where the IT sector was in the past. These stocks have run up and they've done very, very well. How much is left on the table for investors as of now?
See, the thing is India going to become the manufacturing hub for IT, for mobile phones within Asia, ex-China? I think the probability of that happening is clearly playing out, and within that comes the entire component ecosystem. So I see that clearly happening over a longer term period. Some of these stocks have had corrections, including some of our holdings. But having said that, I think if you're in for the long haul, you will see the next Foxcons being built in India, for sure.
And any picks, Gautam, in that space now from here?
Well, we hold Sirma SGS, so we still like the stock. But I think Dixon, we don't own Dixon, but I think Dixon will be a much bigger company in the next 3 to 5 years. They're doing all the right things.
What else do you like? I mean,
within the EMS space, or?
I mean, overall, I mean, top ideas now.
I think power is still going to be a very big business going forward, power generation, whether it's renewables, whether it's thermal, because if you look at what's happening back in the States, and this is some of the feedback that I got, data centers as a percentage of total consumption of power in the United States is 3% of the total power generated in the US. By 2030, it's going to go to 8% because the number of data centers that are coming up and will be needed given 5G, given...
And power consumption is much higher, right?
Is much higher. So the United States is going to be adding another about 47 gigawatts of capacity, power generating capacity over the next 6.5 years. That's about $50 billion of net investment. Before I left for the States, about a month ago, I was on the Blackstone quarterly call, where the chairman, Stephen Schwarzman, basically said that Blackstone, as a private equity fund, has invested $50 billion in the data center business. They have earmarked another $50 billion to be deployed within the data center business, which means their bet, and this is the world's biggest private equity fund with over $1 trillion in assets, that's the big bet they're taking. So I think power generation, newer industries like data centers, there's no pure play today on data centers. Maybe some of those companies will get listed in the future. So you'll see some of that happening.
So what about transformers and those kind of companies?
I think so too, yeah.
Power is a sort of a...
See, the problem in India, and again, I've been asked this specific to one of our holdings called Varun Beverages. Why does this stock trade at 42 times or 45 times forward earnings? The problem I see with some of these sectors, in fact, for that matter, even the wind space, there are only 1 or 2 companies listed. And unfortunately, these stocks are going to trade at a huge premium to the rest of the market or even to their global peers.
But power does not have that problem, right?
Power doesn't have that problem as yet, but specific to transformers, as you asked, there are very few ways to play that.
Correct.
That's the issue.
Any other new ideas? Power is one. Anything else?
If I could just sort of add in over there, since we're talking futuristic sectors, I was just curious on what you're hearing on EVs.
Yeah.
Because, I mean, here there are a couple of stocks that are the play, but just want to understand what the overall thought process is. There's some chatter about how adoption is coming down because in India we have our own issues with charging infra, etc. What's your take?
I think there are 2 ways to look at where India is going to be on the EV space. Either it goes the US way, which is you're seeing a slowdown in EV sales, or it goes the China way, which is, incrementally China's EV market. It's not even an ICE market anymore. So I don't know how India is going to play out, but the charging infrastructure, to your point, Surabhi, is that, yes, that has to be big enough for people, large enough for people to think about buying an EV and not get stuck between Bombay and Surat, or forget about Bombay, Delhi, that'll take some time. But I think the EV space, the only pure way to play this, we have a stock in our portfolio, which is called Hexacom Systems, which makes the EV charging stations. That's 30% of their revenues. They do other stuff too, but that's incrementally going to become a bigger business. I think I think JLR is in Tata Motors, and assuming once that gets split, that could be one way to play it. And I think Mahindra, they've very clearly said 30% of their sales are going to be EV. So, and some of the models that I'm seeing are really fantastic. So my view is there are indirect ways to play EV in this
some of the
country.
Battery companies, Excite, etc., right? Which have
They could be as well, yes. I mean, they've had a huge run-up, but yeah, valuations aside.
Anything else new? The new thing? Gautam?
I can't think of anything new right now. But I think the good news is you've seen a flurry of IPOs of companies and sectors that didn't exist 5 years ago.
Yeah.
So I think there'll be new stuff coming out soon.
Yeah. By the way, you were in the US for
about 3 weeks, yeah.
Wow. So how's inflation? I mean, I was talking to a friend who came back recently, spent 2 weeks. Absolutely crazy inflation.
So I'll tell you, 4-star hotels in New York are anywhere from $400 to $650. It includes taxes, but no breakfast. A one-way trip from JFK into New York City is $120 by taxi.
Wow.
Wow.
So and obviously you have to get, when you leave, you pay 120 as well. So the cost of just getting into Manhattan is roughly about $250. And that doesn't include the tip, which a cab driver usually expects.
That's now we know why the Federal Reserve is going easy on cutting rates, right? Makes perfect sense.
It's not happening. Yeah. The economy is flying in America right now.
Okay. All right. Great to have you with us here, Gautam. Thanks very much for your time.
Thank you.
And good conversation as well. Well, that's, markets for you. Well, the market here and now is down 170 points. So a little bit more on the downside is where we've gone. 22,700 or so on the index. Let's just take a quick look at the Nifty Bank as well, which was down more, 1.25% down there. That's about 630 points. So no incremental cuts there. But caution being built in as we head into the election outcome. Exit polls, of course, the first that we will get Saturday evening before the results next week. We'll take a break. We are back. Short-term trading ideas with our technical experts on the other side. Stay with us.
Welcome back. Well, we briefly breached the 22,700 odd mark, but HDFC Bank is cutting its losses now, so that's what's helped the Nifty claw its way back up. And even the Nifty Bank, that was down close to 700 points, that's pulled back a little bit from the day's low. And Bharti Airtel, that's the other one in there, that's gained close to around 0.5%. Given its weightage, that's some kind of a fight back that we're seeing from Bharti Airtel. So both these two heavyweight names should come up for you, and Hero MotoCorp as well. It's cut its losses into half, now down only around 0.5%. Shrikant Chavan is back with us. Shrikant, it's a weak trading session, no two ways about it. But do you think the Nifty Bank is getting to a zone where, in fact, it finds some kind of support?
Yeah, Nigel. Bank Nifty is like very close to its important support levels, and but because it's like very close to expiry days, most of the time we see continuous pressure on the stock specific or.
I think we are having some issues with that line, so we'll just go to Shrikant as we're told the line is fixed. So those are sort of short-term trading ideas with Shrikant coming up in just a bit from now.
By the way, markets are at the day's low now, so on the verge of now breaching 22,700 on the Nifty.
Yeah, no, absolutely, and the pressure is coming. But again, I mean, it's in percentage terms, it is about 0.75%, right? So keep that in mind. Nifty Bank is also down 600, 650 points, but that's about 1.25% or so. So this is once again, a little bit of caution and a little bit of profit booking going into the big event. Of course, this comes after the run-up that we've had in the recent past. Now, Paytm is the name that we're going to focus on. Shrikant in a bit, but Paytm is locked up still in upper circuit. Sources tell CNBC-TV18 that Vijay Sharma has reached out to potential investors to buy a stake in 197 Communications. Ritu is here with what she's picking up. Ritu.
Well, yes, we've been given to understand from sources that Paytm's founder, Vijay Shekhar Sharma, has been in talks with potential suitors to buy a stake in 197 Communications, which is the parent entity of Paytm. And one of the suitors that Vijay Shekhar has sounded out is the Adani Group. But there is no clarity on the status of these discussions or any confirmation whatsoever if these talks are going to fructify. It also remains unclear so far on whether Vijay Shekhar Sharma is looking to sell stake or one of the other investors in 197 Communications. Because if you look at the shareholding pattern, Vijay Shekhar Sharma directly holds 9.1% stake in OCL. Another 10.28% is held by a firm registered by him called Resilient Asset Management in Netherlands. Now, if you recall, last August, Paytm had announced that Vijay Shekhar would acquire this 10.28% stake from their Chinese investor Antfin through an off-market transfer, where Resilient will issue OCDs to Antfin without any actual cash transfer. So Antfin continues to hold these OCDs, which it can choose to redeem or convert at a later date if it wishes, depending on the contours of the agreement between the two parties, which have not been made public. Now, Antfin separately continues to hold 9.8% stake in OCL. Other key investors are Saif Partners, which holds nearly 15% stake through its entities, the company's directors with 9.34% stake, and so on. A quick word on Paytm Payment Bank as well, where OCL, of course, holds 49% stake. There are no talks, we understand, to sell any direct stake in the bank just yet, and until all customer deposits in the bank and wallet are fully moved out, even the regulator is unlikely to proceed with next steps or any action otherwise. The Adani Group has called reports of acquiring any stake in OCL baseless and false, while Paytm clarified to exchanges that the company is not engaged in any such discussions.
Thanks a lot for that, Ritu. I believe we have Shrikant Chauhan back with us. That line's back. Shrikant, you were running us through your picks. Please go ahead. Oopsie. We lost him again. Hopefully, we'll have him back very, very soon. For the time being, the Nifty has moved below the 22,700. The Nifty Bank as well. That's struggling, actually. That's been the big drag on the index. Let's see what's moved to the low point of the day. Titan. Actually, pull up the intraday chart of Titan. That stock has suddenly moved lower. You have Asian Paints as well, I beg your pardon. That one, in fact, has moved a little bit low in the last few minutes. So both those two are struggling. From the broader markets, the stock that catches your eye is Aditya Birla Fashion and Retail. Remember, it's been a big underperformer in comparison to what Trent has done. But just take a look at that stock. Now it's up close to around 5%. The operational performance actually was quite good. It reported a net loss, but the operational performance was good. And it seems the street, for the time being, likes what they see out there. So that explains why that stock is moved to the high point of the day. Since we have some time, let's run you through the expectations on Tata Steel. The revenue number we're working with is around 58,000 crores. The EBITDA number is around 6,150 to 6,200 crores. The operational performance is what we focus on, so just stick to that. The PAT number normally is very, very volatile. Operational numbers we have with us, the India business, the Europe business, that's Netherlands as well as UK. On all the three businesses, there's a good recovery on a sequential basis. So on a sequential basis, there'll be operating leverage that will play out. Now, the key factor to note in the past quarter for the Europe business is that the Netherlands, blast furnace revamp, that's completed, and the furnace did restart. So that's what will help them in terms of volumes. And UK business, seasonal factors play out there. The most important numbers for Tata Steel is the Europe EBITDA per ton and the India EBITDA per ton. And both those two numbers should come up for you in the screen. So for India, you're working with 14,150 rupees per ton. Keep an eye out on that number. That's the India EBITDA per ton. On the European business, we're working with a loss of around $87 per ton. If in fact it can narrow those losses, remember last 4-5 quarters we've seen losses. If the loss can come down, then the street will track that very, very closely. The other factors that play, the standalone EBITDA per ton is under pressure because pricing has been weak and coking coal costs will go up by around $10 to around $20 on a per ton basis. For TSC, the losses will come down because operating leverage will play out, as I told you, because Netherlands has restarted, and also they've taken some cost optimization measures. So we'll keep an eye out for that, for the numbers. It comes post-market as, and any kind of debt reduction is something that we could look forward to as well. For the time being, slip in a short break. You come back, we'll run you through market closing. Welcome back. Well, the stock that we are focusing on is ABFRL. Mayuresh Joshi, the head of equity research at William O'Neill, joins us on the show. Well, hi, Mayuresh. Good afternoon. Good to see you in. What's your view on ABFRL? A big underperformer, didn't do the right moves. Now they're announced segregating of the businesses. Looks like they want to unlock some value. Your take.
Afternoon, Nigel. No, I think the numbers have been sequentially and on a year-on-year basis quite good. So if you probably look at the standalone numbers, if I'm not mistaken, they've done EBITDA margins close to 14.5%. And even on a consolidated basis, they've come close to 11%. Obviously, if you look at the segmental classification, their lifestyle brands are expected to continue doing well. So they've seen a very good recovery on a year-on-year basis. And when you're probably looking at the entire perspective in terms of the ethnic business, how the demerger is expected to play out as well with ABFRL, the expectations of more stores coming in. I think a large part of how the distribution network is, how their key bands will work, specifically in terms of lifestyle, the youth western wear, sportswear, they're also getting into innerwear. So I think there is expectations of good volume growth coming through on the branded part of the business. And therefore, as discretionary spends keep on going higher, specifically for urban as well as semi-urban areas, I think this should be a key beneficiary as far as numbers are concerned. Obviously, the chart that you're now putting out, Trent has been a huge outperformer. But at some point, I think with the numbers that ABFRL has posted, there is some recovery that is expected. So anybody holding onto the stock should continue holding. There should be good, solid recovery from the second half for ABFRL and a consistent one at that.
Okay, got it. Mayuresh, hi, good afternoon. I was highlighting this earlier as well. The selling on life insurance stocks, a lot of the private insurers, HDFC, SBI, ICICI Pru, they've all been down quite a bit today. Would you read anything into it, hearing anything about it? And what's your take on the sector?
No, not too sure. I think whether there are any regulations that have been proposed by the regulator, and that's why the stocks are down. But generally, if you probably look at Surbi, the entire construct of these players, since the tax tweaks that happened last year in the budget, many players, including HDFC Life, ICICI Pru, even LIC to a certain extent, had to go through a change in their product mix. And with the change in the product mix, obviously the entire expense part that gets front-loaded, both in terms of commissions to be paid out and the operating expenses as well. They were on the higher side for both these players. They started moving higher. And the value of new business margin starts coming down. So to that extent, I think till the appropriate mix is achieved, which might take a few quarters more, I think the numbers might still be a little bit on the softer side. I think SBI Life is something that still stands out in our opinion. Obviously, price action has been very, very muted for all the players. We'll still need to see good price action, specifically on the EPS and RS ratings that we see at Markets with India. But as far as the product mix is concerned, I think it's got a very, very stable product mix. When it probably comes to the VNB margins as well, that should be maintained because the product mix is very, very appropriate compared to the three players. They've got a huge bank assurance tie-up through SBI, which gives them a huge network and distribution reach. And the overall operating costs are very, very minimal. And they've done an added provisioning as well a few quarters back, which also gives them the cushion. Therefore, I think in terms of expected embedded values, expected return on embedded values, as well as VNB margin maintenance, I think SBI Life should relatively stand out compared to the other two life insurance players.
By the way, Mazgaon Docs reported numbers a while back, about 30 minutes back. Revenue jump of 50%, margin expansion of more than 700 basis points to 17%, and the profits have doubled. Look at that stock reaction after 3 o'clock when the numbers came through. Now up close to about 11%. And Sumitomo Chemicals was a big mover yesterday. Today it started trade a bit soft, flattish, but now the stock is up. It's a double-digit gain now again on Sumitomo Chemicals. So 2 back-to-back days of big moves. Mayuresh, in this earnings season, in the last leg over the last couple of days, which stocks caught your attention in terms of strong numbers where we've seen earnings upgrade and a potential to add to one's portfolio?
Afternoon, Rima. So I think from a Markets with India perspective, what we found out is domestic infra-related stocks can still continue doing well. So Welspun Corp, Jindal Saw, as an example, is where I think the potential in terms of business outlook and opportunities are still underutilized. So to that extent, I think the 16,000 kilometers to get extended to 27,000 kilometers, the huge pipeline that is expected to get put out. A lot more orders can come through from the domestic business. Nal Sejal has an outlay of 70,000 crores, as does Saudi Arabia. I think Saudi Arabia is spending big time in terms of not just the pipelines, but also the desalination networks as well, which helps these players. So I think a few of these players like Welspun, Jindal, so the numbers were decent, can do well. One outlier that we probably are liking at this juncture might be Balmer Lorry. This stock, typically a government entity, but largely into logistics. They've got leadership position in terms of industrial packaging, steel drums as an example. What you will also see is the kind of capex that they're probably doing in terms of third-party logistic warehouses, which is going to be a big thing going forward. And therefore, I think the management has a clear vision in terms of achieving a revenue of around 6,000 crores over the next 2 to 3 years with very, very healthy margins. And even for this year, on an annualized basis, they've done an EPS of 15 rupees compared to 10 rupees for FY23. So I think one stock where the dividend yield is decent and earnings can be decent can also be Balmer Lorry. So construction, manufacturing are themes that we probably like and participate in.
Okay, all right. We'll leave it there. Out of time, Mayuresh, thanks very much for joining us here on this program at least, and we'll continue our conversation a little later. Thank you for joining in. 180 points down on the Nifty, 22,710 is where we are at this point in time, and we'll basically end down by that much, around the 22,700 level. Now, the Nifty Bank will be down about 1.25%, 48,600 roughly is the close coming through there. The small cap index, when we started, was in the green. It's just absolutely flat, almost unchanged as of right now compared to yesterday's close. And the mid cap index is still down about 0.5%, 0.4% down on the mid cap index coming through there. But of course, lots happening with specific names that we've been discussing. Rima.
Well, banks were the principal culprit for the way the indexes ended lower. So Nifty Bank